Oh man, it's a huge day for crypto. We've got Gary Gensler on the brink of being finished. We've got Bitcoin hugely bullish right now, and long-term holders are accumulating. What a difference a week or two makes in this crypto space. Congratulations to those who traded this move I shared with you guys yesterday. A textbook break of a symmetrical triangle, taking you to the top of the triangle and some here. A nice extended move on Bitcoin, and originally taking us as high as 27,100. So a lot of bullish momentum here on Bitcoin on the shorter time frames. Now, to add to that, Gary Gensler could be in huge trouble now, and his brief crackdown on crypto, which he's come out so strongly to start of 2023, trying to put crypto back in its box, could be over. There's a legal doctrine which could be saying that the power has to go back to Congress, and a lot of what Gary Gensler could be doing is overstepping. Let me show you guys some of the major details here. So this relates to a doctrine called the Major Questions Doctrine, and this relates to how courts look at what executive agencies do, which is the SEC, in the so-called independent agencies, and consider how much deference to give the things that they do. In other words, the SEC get their mandate to go and regulate digital assets, for example, by Congress. But there's no clear structure in terms of how far they can go in doing so without needing the permission of Congress. So when you look at this here, part of this could be that a lot of these things could come back to Congress and taken out of the hands of Gary Gensler. The Major Questions Doctrine demands clear congressional authorization for major regulatory decisions, and it could challenge the SEC's reach and authority in regulated digital assets that operate on decentralized blockchains. Now, guys, this is going to be an important argument that you expect Coinbase and Binance to bring to court with them. Now, it's going to take some time as the court proceedings go on, but this could be a clever way of saying that, look, this needs to go to Congress. This is overreaching by Gary Gensler, who's just enforcing and not providing clear guidelines, and he's overreaching. This is a big step here in the markets, and markets are responding to this positively. Now, the other thing to take a look at, which is interesting, and again, part of the stuff we kind of know is going on, is that the IMF is working on a rail, right? They're trying to create railings for global CBDC platform. So in other words, we know that, the majority of countries here are trying to go and set up their own CBDC. 114 central banks are exploring CBDCs. And what the IMF are trying to do, like they do best, is control everything, right? So they want to create the railings from which these countries can interact using their CBDC. So again, we know what's going on, right? Diminish crypto, put crypto back in its box, and let everybody use this CBDC, which they're going to try to sell us as if it's something amazing or revolutionary, when it's not. It's just the digital form of the fiat currency you've got. It doesn't have any of the inherent properties that crypto does in terms of immutability, decentralization. You cannot censor it, right? None of these features are going to exist in your CBDC. It's just going to be a digital version of what you've got, but they're going to try to sell it to us like it's the next sliced bread. So we're not going to fall for that, but again, we know what they're working on. Their plan is super clear, and it's coming into fruition. Now, the other thing I wanted to share with you was this. A very interesting piece of on-chain metrics shared by Glassnode. And what you'll notice here is the blue lines here are showing you, these turquoise colored lines here are showing you the increasing illiquid supply, okay? This is supply of Bitcoin being held by people who have no history or evidence that they sell. They don't have a history of selling. In other words, these are wallet addresses that people buy in and they've held in. They're hodlers. Right? And you're starting to see this increasing now to 147,000 here, okay? So this is a lot of Bitcoin being accumulated up here, and this shows that there is a solid undercurrent of demand here. And that's what's important, because the last time you saw this accumulation period, look at these skyscraper candles, were when the price was low in this period here. So again, people are starting to accumulate and getting ready for the next Bitcoin halving, which is less than a year away, right? People are starting to position themselves. They know that this may be the final time you're getting Bitcoin in these areas of 27,000, 25,000. Does it really matter if it's 27 or 25 when you're expecting Bitcoin to go to 69 and then eclipse the all-time highs to go work its way towards 100,000? And that's where people need to remind themselves is, yes, you could be following the news day in, day out, but are you letting that FUD, are you letting that fear, that FOMO prevent you from just doing your DCAing? Sometimes it's just best to just switch off and do your DCA, make sure you're accumulating, because if you know and believe in the product, if you believe in this as an asset class and that the halving is coming, and we've seen what has happened every single halving on a 4-year cycle, why are you not dollar cost averaging, right? If it goes back to 69, are you really going to care if it was 25,300 or 26,200? No, it doesn't matter. You either DCA'd or you didn't, right, in the bear market. And this may be the final innings of this bear market. We're clearly seeing here that the long-term holders are hodling, they are buying, and the supply is moving to those strong hands. And those strong hands, once they've got that Bitcoin, guys, they're not looking to sell it to you later on. They will be holding it. And that's going to create the scarcity. That's what's going to bring the price to the upside. Now, when we jump on back in the charts here, you can see, of course, here on the hourly, a nice big move out from the symmetrical triangle. But what was important about this move was not necessarily just the break from the symmetrical triangle. It was that that symmetrical triangle allowed us to reclaim the horizontal level at 26,600 here. This 26.6k level was quite difficult for us. We've got rejected a few times here and a few times in the triangle here. Finally, we got back above it. So now what we're looking for is a retest, right? Come back down, cool off a little bit, retest, which is trying to do, and go work an attack here at 27.3. Now, the beautiful thing behind doing that is when you then look at this from a different structure, which is our falling wedge, which of course here in this instance is a bullish pattern. If we can break this to the upside, that could be a powerful move here for Bitcoin. So if I just zoom out here to the daily chart, you'll be able to see just how powerful this move could be, right? If you wanted to take the extended move, and again, just take this extended move here all the way here and apply that to the point of breakout, you're going to get a crazy price target, right? Because the move that took us from 19,500 all the way up to 31 is the momentum of the latest swing we've had. This is the call down leg, and then your extended leg could take you as high up as 37,000 here on the next move up. So really important that we get this clean breakout. We don't want to get rejected here. We don't want to have a little fake out and fizzle out and fall all the way back over here. No, we need a clear breakout with volume. A retest is okay, and then start working our way progressively up here to the upside. And the first major resistance is going to be 30, and then 31, which is where we got rejected from. Very important levels. So if I was trading this on a short-term time frame, not for my long-term bags, I'd be looking for the breakout here with confirmation, and I'd be looking to take out profits here at 29,800 range, and just a little bit shy of 31, so probably 30,800 as well. Remember, I never take profit at round numbers. People sometimes set their take profits at exactly 31 or 30. No, everybody would have taken their profits out before, and sometimes you fizzle out before then. So you want to get out quite quickly. So that's what I'll be doing. Now for my long-term bag, I just want to be DCAing, right? If I'm looking at this and saying, hang on a second, Bitcoin could be going on a nice extended move here, I want to be adding to my bags. I want to be making sure that I'm accumulating. And now the other reason to accumulate is this. Look at what we just managed to do, right? Well, what we're trying to do right now. We've got 11 hours before this daily candle closes. Can we close above this EMA ribbon, right? Can we reclaim this EMA ribbon? We're just a few dollars away here. We just need that close above. A little bit of a positive green day today would be helpful, and we can get above that EMA ribbon. But if we don't, the bears still have an opportunity, right? The bears still have an opportunity today to send us to the downside. And you've got to be a little bit cautious, because I was looking at the pre-market just now, and the pre-market is showing a little bit red. So this, because it's a shortened week, they had Monday off in traditional markets. Also, they had a big week, right? They've had a big couple of weeks in traditional markets. So maybe they're just having a cooling off. Maybe they want to take this week as a breather. But the problem is, if they have a cooling off, what effect will that have for us on crypto? We need to take momentum. We need to finish green on this day and get above our daily EMA ribbon. Now, the other pattern you can look at is, of course, our big our big cup and handle pattern. Again, we've got a lot of work to do for this cup and handle pattern. I know we're excited and we've had a good move from the bottom here to the upside, but we're still in a downward trend, right? So you've got to understand everything on its respective timeline. On the short time frames, we're looking great, but on the daily time frame, we're still in a downward trend. You can't deny that's a downward trend. Of course, it's a downward trend, right? This little euphoria we've had over 4 or 5 days is just a move from the bottom of the channel up here. We've not even got to the top of the channel here. So we've got some work to do, right? We've got to get to the top of the channel, break out, and work our way up. And part of that is going to come from us breaking out of that falling wedge, which I shared with you, the green pattern that I shared with you. Now, once we can clear this cup and handle to the top side and work our way up towards the neckline, then we start looking at this neckline at 30,000 and say, hang on, if we can clear that neckline and break beyond, then we can set up for a nice big move up towards our price target of this cup and handle pattern sitting at 45. And that remarkably is still intact, right? That is our reversal pattern to get out of it. Another pattern I want to share with you guys here on the shorter time frame is take a look at the hourly head and shoulders pattern that's forming, right? Again, you can see it's got the key characteristics of the head and shoulders pattern. It's not as clear, but you can see here you got a left head, you come back, left shoulder, you come back for the head, and you get your right shoulder as well. So again, you want to look for the breakout on this kind of move And again, if you can break the neckline on this kind of move, you're looking at a price target here, apply it to the point of breakout, and let's see what this price target gives us. Gives us a price target up at 28.7k. So these are all the little moves that are going to help us break out from the bigger patterns. And these are the patterns I'm monitoring currently. The other thing worth looking at right now is the dollar index, right? So let's check in on the dollar index to see how it's doing. We need this to move to the downside. And you can see exactly why now the traditional markets are kind of struggling here today. The dollar index having a powerful couple of hours here. If I switch this up to the daily time frame, you can see it's posting a green candle here today, which explains why the traditional markets are red here in the pre-market. So as this day progresses, we need traditional markets to start moving to the upside. We want to see dollar index cool down, and that way we can get a green day on Bitcoin. But look at it, guys. We're getting closer, right? We're getting closer to the halving. And those that are serious, the hodlers, they're making their actions very clear. They're DCAing. They're hodling. They're buying Bitcoin now in these price vicinity, knowing fully well that very quickly the price action could spike from where we're at now, which is still 26,800, towards 45 quite quickly and powerfully. And then you're going to be scrambling. Then you're going to be stuck in no man's land where you're like, hang on, I could have bought at 23, 24, 25 and I didn't. Now the Bitcoin price could be getting towards 69 and I'm stuck here at 45. Do I buy? Do I not buy? And that's the regret that's going to eat away at you. So if you can, if you've got money you're willing to lose, start DCAing, right? Start DCAing. If you've got conviction, DCA, add to your portfolio over time. That's the best way. You're never going to get this perfect price point where you feel so confident. Just like there isn't a perfect buy point, there's no perfect sell point either. You've just got to buy in periods of fear and sell in periods of greed. And if you keep that broad structure, you're going to do well investing. Hope you guys enjoyed this video. Don't forget to smash the likes. Don't forget to subscribe. Don't forget to go watch this video here. And I'll see you in the next one.